Hello guys, welcome back. In the previous session, we have revised entirely about the subscribe capital till subscribe capital. Authorized, issued, subscribed. Yes. See ya. Subscribed, issued, authorized. Authorized, issued, subscribed. We have learned. Now we are in a position to learn called up share capital. Now we are in a position to learn called up share capital. Called up share capital means amount called by the company to be paid by the shareholders towards the subscribed capital. Whatever the company is asking issued, on that the persons will subscribe. On that subscription, whatever the shareholder paid by the shareholder is known as called up capital, called up share capital. For example, a company has issued 2 lakh equity shares of rupees 10 each, against which a company has called only rupees 5 per share to be paid by the further. To be paid means they are asking, it is a due. They are asking the shareholder, they are not getting from the shareholder, to be paid by the shareholder. In this case, 10 lakh, that is 2 lakh into 5 rupee, 10 lakh will be your called up capital. Called up, I am calling it. Okay, what is the definition of called up capital? Listen very carefully. As per section 2 clause 15 of the Companies Act 2013, under chapter 1, section 2 clause 15 of Companies Act 2013, called up capital means such part of the capital which has been called up for the payment. It has been called up, which has been called for payment. I am calling only, I am not receiving. Called up means I am only calling the people to pay this much of amount, this much of worth of shareholders, what you are holding to me. Okay. The next point, listen. Paid up share capital. What is share capital paid up? Paid up share capital, PUC. You will see no. PUC in accounting, PUC in law, turnover ratio. Paid up share capital should be 4 crores and turnover should be 40 crores as per in case of small company. There's some turnover limit for audit company, everything. What is paid up share capital? Listen. Paid up share capital or a share capital paid up means amount received by the company as paid up against share capital and credited to share capital account. Listen, basic clarity. Paid up share capital inclusive of equity share capital plus preference share capital. Both is equal to PUC. What is PUC? Paid up capital. What is paid up capital? Or PUSC? PUC, I will usually called as PUC. PUC is nothing but ESC plus PSC. Equity share capital plus PC. That is preference share capital. Next, it also credited, paid up to the share capital account without payment being received in shares. Example, important example, clarity. Listen, the knowledge and clarity will come together. Okay, if you learn the knowledge properly, the clarity will come automatically. If you learn the knowledge wrong way, the clarity will be gone out. You will be in a confusion position. Okay, always be in a clarity state. For example, company purchases machinery of rupees 10 lakh. Okay, 10 lakh worth of machinery they have purchased. 10 lakh worth of machinery they have purchased and issued fully paid shares to the vendor. Who is the vendor? Vendor is a supplier. So the company will credit 10 lakh to share capital as paid up. Also, if company reissues forfeited shares at a discount of rupees 3 per share, the company will credit the discount amount of rupees 3 per share to a share capital because that share capital is a gain for them. So they will credit as paid up. For basic example, at the time of issuing, I purchased plant and machinery from a vendor. At the time, the journal entry will be machinery to vendor. 10 lakh, 10 lakh. Passed. Okay. Through the vendor for them, it is a credit. I am purchasing a machinery on credit by issuing a share. So it is a equity share capital, 10 lakh, 10 lakh. 10 lakh will be passed. Forgot about reissues and forfeited. We will come. Okay. Then come to what is the definition? We will study meaning and we will study as per Companies Act also. So both together, if you study, you will get an enriched knowledge. the definition paid up share capital or a share capital paid up, anything you can say. Paid up share capital or share capital paid up, both are acceptable. Section 2, clause 64 of the Companies Act 2013. If you study like this, you will get a superseded knowledge. You will get the knowledge will automatically increase. Whatever we studied, authorized we studied, issued we have learned, subscribed we have learned, in-depth notes to accounts we have learned. Now we are in a position to learn up called up capital. Now we are in a position to learn up paid up share capital. Now come back. Listen. Paid up share capital or a share capital paid up means aggregate amount of money credited as paid up is equivalent to the amount received as paid up in respect of shares issued, and also any amount credited as a paid up in respect of shares, but does not include any other amount in respect of such shares by whatever name called. Listen with this amount. Just try to forget this. This is the definition they have given to try to confuse you. Okay, don't even look into it. They will never going to ask in exam also. Okay, if they are going to ask in exam, give this definition. Okay, give this meaning. You will write meaning. Okay, accounting, you will never mug up definitions. Most important thing, which most of them are not having clarity, listen. Call scenarios. What is the call scenarios they are saying? Call scenarios is nothing but means the amount not received by the company against the amount called up by it towards a share capital. Whatever I am calling, sir, that particular shareholder is not paying to me, sir, then it will become call scenarios, sir. Shares against which call scenarios are shown under a heading, subscribe but not fully paid. Listen, this is the most important clarity. It should only shown under the subscribe but not fully paid. Okay, at the amount received by the company against those. For example, DBH International Limited issued 1,50,000 equity shares of rupees 10 each. All calls has been made. Means first call, second call, first call, application money, allotment money, first call, second call, everything has been made. Received except final call. That's a point. That's a point here I want to make. Except a final call of 2 per share on what equity shares? Only 10,000 equity shares. So listen. I am calling 10 rupiah. I am issuing 10 rupiah worth of share. So 10 rupiah has been called up. Subscribed and called up. So how many shares are paying? Out of 1,50,000, 10,000 has not paid some value. Even though they are not paid some value, you should write them subscribed and fully paid up. You should only write 1,40,000 of rupees 10 each and 14 lakh. Subscribed but not fully paid up. And that 10,000 equity shares are 10 rupee they need to pay up. So 1 lakh, what in reality they are paying? 10,000 shareholders holding, they only pay 8 rupees. They will never pay 2 rupees. So 2 rupees is a call scenarios. Instead of never pay, they will not paying right now. Okay, even though after sending notice, they are not paying right now. That is a call scenarios. 20. So out of net effect, it will become 80,000. Put together, if you add, it will become 14,80,000. This is how you need to show. This is what I showed it in my example previously. Are you able to understood? Next, calls in advance. What is calls in advance? Calls in advance. If it is an articles of association permits, AOA should permit. They may receive against the calls not yet made. Even though the call is not made, but you need some value, you should only do if companies AOA should permit. If you are returning your AOA, if you are already at the time of returning AOA, if you already permit, you can get it. So the amount so received is called calls in advance. The amount so received is called calls in advance. So it is classified or shown in the balance sheet as other current asset. Most important thing, calls in advance will be shown in the balance sheet as other current asset under the, it is classified shown in the balance sheet as other current liabilities. It is not asset, it is other current liabilities under a main head current liabilities. Other current liabilities under instead of asset, erase it at asset and write down as liabilities, other current liabilities under a main heading current liabilities. Under a main heading current liabilities. Now, these three are important. They may test you in adjustments. Besides the following information is given in notes to accounts on the share capital. Besides the above, whatever you studied in the previous session, along with that, some information. What information? Some information should be shown. What is the some information, sir? Can you explain, sir? Yes, I will do. Shares allotted for consideration other than cash. Suppose if you purchase an asset or service is taken. For services taken, you are paying a share. You are allotting a share. Then it is a consideration other than cash. You are not paying in cash. You are paying in another mode. You are paying in kind. That kind is a share capital. So the journal entry will be that particular asset to that value you will write. And share capital, the net effect we will write. And underwriting commission, few cases. Underwriting commission will be there. And shares allotted as fully paid up. These are the situations. Situation number 1, purchase of asset. Situation number 2, services taken. Situation number 3, underwriting commission. Situation number 4, bonus shares. For bonus shares, under why it is a consideration other than cash, we are not collecting a cash from the shareholder. So it is considered as consideration other than cash. Without a consideration, I am allotting a share, that is a bonus share. Without a consideration, I am allotting a share, that is a bonus share. What is the consideration I will get in return for? Nothing, no. I am having huge surplus. I am having a reserves. I am having a huge reserves. So I want to create a wealth to the shareholder. So I am giving a bonus share. It's a free share. That's what you have learned. Okay. Information is to be disclosed under subscribed capital. You should only disclose the information in brackets. That I will show you how you need to do. We will take another example. We will write it. Okay. Next, listen. Important. Calls in arrears are shown by way of deduction, important deduction from the amount of subscribed capital under a heading. It should only be in the heading. Subscribed but not fully paid up. Subscribed but not fully paid up. Calls in arrears from directors and officers, if any, like ESOP, employee stock option plan, employee stock option scheme, ESOS, employee stock option scheme, both allotting of shares to the directors or allotting the shares to the officers ought to be disclosed. If there is any calls in arrears, like a difference between the vesting period that we will discuss in ESOP, okay, that should be given separately. Okay, calls in arrears from other shareholders should be shown separately under a same heading, subscribed but not fully paid up. And whatever the directors and the officers calls in arrears should be shown as a separate heading under a same subheading, subscribed but not fully paid up. Now, third point, crucial. Amount forfeited shares. Listen. Amount forfeited shares, which is the gain for the business. Amount of forfeited shares is a gain for the business. Shares is also gain. Whatever that particular shareholder is already being paid, that is also a gain. So he will get a profit in terms of amount also. He will again get back his shares. So then again he will reissue the share. So it is a double the profit. Notes to accounts under a heading share capital are not in forfeited shares account. Always there is nothing account will be maintained for forfeited shares account. It should only be shown in share capital account. The amount received on forfeited shares and not reissued is shown in notes to accounts under a heading share capital. The point is amount received. The important point is amount received on forfeited shares and not reissued. You should not reissue. If you are reissuing it is a different story. Mostly they will never ask you reissue. Okay. For forfeited shares are not reissued is shown in the notes to accounts under share capital as a separate entity. Okay. This entire discussion, whatever I am telling you, it can also be completed within a matter of 5 minutes. 5 to 10 minutes. You'll simply write this. This is a format you need to follow. If you follow, you are going to get a mark, but you will never find this kind of intricacies in this. This much of small nuances you should not be able to know. You should know it basically. So whatever I will write and then I will come back. Okay, whatever I will give you your notes and then I will come back. Listen. First, listen. Shall we go for the example? Imaginary example, assumed data. What is the first thing we need to write? Everyone repeat with me. First thing, notes to account, sir. What is a notes to account, sir? What is a note number, sir? Note number 1, sir. What is a note number 1? Share capital is your note number 1, sir. So we will write share capital 1. Under a share capital note number 1, sir. What we will write, sir? Under share capital number 1, we will first write particular, sir. And we will open some dummy account rupees. Then we will open actual rupees account. That actual rupees account assumed year ended is 31st March 2024, sir. 2024. So once you write a particulars, again you can give a heading share capital, or you can directly start with authorized share capital, or directly you are given share capital, no. So you can directly start with authorized share capital. Or if you feeling something which you cannot start with authorized share capital, so you can start with share capital, and that you will write authorized capital. Authorized capital you can write because already you written in top, you have already written share capital. So you will simply write authorized capital. Under an authorized capital, assume there is a 1 lakh equity shares. Same example, 1 lakh equity shares. Now I am changing to very slow short forms. 1 lakh equity shares of rupees 10 each will give you 10 lakh directly shown in the last column. And just write 2 lines, means you are balanced it. You will just disclose the information. You will never take it to the balance sheet. Okay. Or if you are feeling, you can write 10 lakh. Because this is no balancing is required, no totaling is required, because there is only 10 lakh, no. So you can simply write down like that. Okay. In exam also it is applicable. Okay. Next, listen. Assume there is an issued capital. Authorized capital and issued capital both are just the disclosures. 90,000 equity shares of rupees 10 each. In exams, no short forms is allowed. You should write the entire equity shares fully. Okay. That is 9 lakh. That is also not going to come. So we will balance it. Next heading. Most important hero comes in this note number 1. That is subscribe capital. Everyone will commit a mistake only in subscribe capital. Listen, under a subscribe capital divided into 2, subscribed and fully paid up, subscribed but not fully paid up. First thing, subscribed and fully paid up. Assume out of rupees 90,000, 80,000 equity shares of rupees 10 each has been fully paid up. Subscribed and fully paid up. This is 8 lakh. The point which I want to make over here is, listen. The point which I want to make over here is, listen. Whatever I am going to write it here, it is most important. Listen. Whenever in brackets there is certain information out of the above, this is an important, they may ask you in adjustments. You may treat there is some adjustments to be needed. No, there is no adjustments needs to be there. You should listen. Out of the above, suppose I purchased machinery. On that I allotted 20,000 equity shares, or I allotted 30,000 equity shares for that worth of machinery. So what I should do, out of the above, 30,000 equity shares have been issued for consideration other than cash. In extensive to it, this is also correct. If you stop with this is also correct. Or extend to it, you can also write down one more professional term, that is pursuant. That is pursuant to a contract. Based on the contract I have purchased on credit, based on the contract I allotted as shares. That's a meaning. If you write like this, the examiner will treat you like anything. They will give you a full marks in that particular notes to accounts. Each and every notes to accounts in depth we are going to learn, so that you have enormous clarity. Any sum it will come, you will directly go and put. You will not require single help from me to do a particular problem, but I will help you. I will solve some problems for sure. Okay, listen. Now come to the most important aspect of the note 1, that is subscribe but not fully paid up. Subscribe but not fully paid up. Now, out of which assume 8,000 equity shares. Assume 8,000 equity shares of rupees 10 each. Should be shown on dummy column. How much? 8 lakh. Dummy column, sorry. How much is 8,000 into 10? How much is 8,000 into 10? Yeah, 80,000, right? 80,000. Fine. Assume there is calls in arrear. Few shareholders are not going to pay you. So what you will do? Calls in arrears, you will take 8,000 into calls in arrears, you will take 8,000 shares into rupees 2 that people is not going to pay. So 8,000 into 2 will give you 16,000. So you will show 64,000 directly. You will show 64,000 directly. Listen, you will directly show how much? 64,000 immediately. Sir, why you have written only 8,000, sir? Sir, you said na 90,000 equity shares, no? Out of which 80,000 is there. 80,000 is there. 8,000 is there. Where the 2,000 was gone, sir? The 2,000, I treated this as forfeited shares. I treated them as a forfeited shares. So what I should do? Under a heading subscribed and not fully paid up, I will add. Add means I will credited. I will credited forfeited shares account. I will credited forfeited shares account. What is the credited, sir? 2,000 into rupees 6. Assume that is a 2,000 into rupees 6 is a forfeited value. Rupees 6 is a forfeited value. Okay, 4 they are not paid. 6 rupees is already paid. That we are forfeited right now. Okay, that is 2,000 into 6 will give you 12,000. You should not write it in dummy column. You should not write it in dummy column. Everyone will commit a mistake. You should write it in the second rupees column. Okay, once if you have done, what is the total? You should show this as only information. This is only correct. Which is correct? Which is absolutely correct. Subscribe capital is correct. So add this value 64 plus 12. Add everything. 8,76,000, sir. What you should write? In bracket, you should write total. If you want to have more clarity in exam, you should simply write. In professional exams, you should simply write total. Or you can go one step and write what you can write. I will never recommend it to do, but I will tell you to be shown in balance sheet against SC. Here SC means what? Share capital. SC means what? Share capital. Okay. Now come to this point. With this, we have successfully completed with note number 1. Till now, we have studied only note number 1. Okay. Listen. This should be referred after the given information below. After studying this, in case a company has reissued the forfeited shares, which is resulted in gain profit. Here, whatever forfeited shares we have written, it is only forfeited. It is not reissued. That is assumption here we have taken. In reality also, you will do that. If it is a reissued, what will happen? I will tell you. In case of company reissued the forfeited shares, already they will be in a gain. That is a profit. That gain, that profit on reissued share should be transferred to capital reserve. MCQ. Why it is transferred to capital reserve? We will see it later. Okay, we will see it later. Okay, at the reserves and surplus, I will cover this. Okay, reissued shares is transferred to capital reserve. So capital reserve will also shown under shareholders fund only, but on the different heading, not on share capital, under a heading reserves and surplus. Both are profit. Okay, but we are showing this on a capital reserve under a heading reserve and surplus, under a main heading shareholders fund, under the part of equities and liabilities, shareholders fund, share capital, reserves and surplus. Under the reserves and surplus, we will show. Okay, first item will be EQ, part 1. Under EQ, first one will be SCF, shareholders fund. Again, subpart will be SC. SC note number only we have studied. SC note number only we have studied. We have found some value. Next session, we are going to study about reserves and surplus. The next session, we are going to study about reserves and surplus. That will be your note number 2. In-depth understanding I'm going to give you. Okay. Third will be money received against share warrant. There is no note number. Basically, they will never ask you. But for understanding purpose, most of them don't know about that. Okay, but I will tell you what is it. Then number 2 will be SAMPA, share application money pending allotment, SAMPA. Some cases it will be there, some cases why, how, when it will happen, when it will come, everything we will discuss. 3 NCL, 4 CL. It will take lots and lots of time to understand, my dear. If you are treating my class as a conceptual class, you can study under me. If you just want quick classes will quickly destroy your career. You will pass. Yes, surely you are going to pass. If you learn very fast, if you mug up the concept, you will surely pass. I will guarantee you, you will pass it. Pass the exam with 40 marks, 45 marks, 50 marks, you will pass. Those who are highly knowledgeable, highly memory power, they will surely pass with 70 marks. But when you go and sit in an interview, you will be in a worst position to answer the questions. You will never learn what it is. You should learn why it is. Why it is done. Why it is done. You should never ask what is done. All the persons will teach you what it is. But very few people in the markets will teach you why it is. Okay. You should study why. Then only the accounting will become CC. Okay. Then only accounting will become easy. If you are not asking why and why, your results will become in a wrong position, and others will tell why are you not passing the professional examination. That's a question they will ask you. So better you are asking a question why to your faculty, or whether the unknown people will come and ask you why and why to you. Why you are not clearing the exam, why you are not focusing on that, why you are writing this much. Anybody, anything can be told by all the people. Always focus on yourself. What your mind tells, do it. What your mind tells, do it. Always use your intellect. Always use your intellect to take decisions. Always use your intellect to take the decisions. Okay. So be positive. Okay. We will see in the next session with a new topic. Of reserves and surplus. With this signing off of Sudarshan, have a great day, guys.